this bubble in the US is eerily similar to the 2000 tech bubble. It's led by the NASDAQ, it's led by the specs. 2000, the specs underperformed all year and the S&P continued to climb. It is just possible that the S&P will rally to a new high. I think it is impossible that the specs will. So I think the game has started, and it will play out perhaps rather like 2000.
How is the global inflation picture contributing to the environment?
Historically, the stock market has hated inflation. It crushes price-earnings ratios. This time, uniquely, it did not. Inflation started June of last year, roared through the roof, and the PEs continued to widen, to rise. Nothing like that had happened before. And we have a model that goes back to 1925. And there are two factors that determine price-earnings ratios, or the price level of the market. One of them is profit margins. Of course, it loves them. And the other is inflation. Of course, it hates it. And they have worked like a charm. And in 2000, you had, for example, at the top of the market, world record profit margins and very little inflation. And today we have world record profit margins, but we have rather high inflation. The market should have dropped starting in the middle of last year had it been following the normal battle plan. It did not. The market is saying about inflation that it totally ignores it. It completely believes the Fed that it's temporary, ephemeral, etc. And it doesn't appear to be. And if that seeps into the market in the usual way, it will mercilessly depress the price-earnings ratios. Yes, I do. And I know the administration does. And in the end, the Fed doesn't like to get on the bad side of the administration. Politically, inflation is death. The average person in the street notices it, measures it, if anything, exaggerates it. But even with that exaggeration, it's painful and politically very, very tough on the voting pattern. And therefore, the administration really wants to do everything it can to get inflation down. So it will be discreetly leaning on the Fed to do what it can. You know, there are people who spend their entire lives watching the Fed and going into the nuances of quarter points and half points, and I do not. I am confident that they will move at the stronger end of the range. I am confident they will try very hard to make sure that inflation does not become embedded. I'm also confident that that will be difficult because we're very short of labor, we're running very scarce, and wage rates will start to come through the system in the US increasingly for the next few months. That makes it very difficult to control inflation. So it will be quite a struggle, and the Fed will have to raise the rates quite a bit. If you have to own US stocks, you should own high quality stocks that are in good financial shape, because this can always spiral in to something of a financial crisis. They often do. I would emphasize, in general though, non-US stocks. And quite a few countries, as I said, are not that bad. Emerging markets has some overhang problems. If the US goes and commodities are high priced, it's a mixed blessing at best for them, but they're very, very cheap. And in the end, cheapness usually trumps everything else. So emerging markets, some of the cheaper developed countries would be very much better idea than a massive holding of US equities.